What up guys, welcome back to the video. In this very video I'm going to be showing you guys how you should trade every single day to make the most out of the market, right? I reached about $20 this very week, right? And I ended the week making about over $100 profits, right? This week, right? I'm going to show the screenshot live, right? Now I didn't flip the account, I was gradually trading it, right? Now I didn't take more trade. I'm going to show you all the trade I took and how I took them and what I did throughout this week and how you should be doing it every single day, right? Even if you have a little amount, even if your account is a bigger account, right? I'm going to show you how you should go about your day trading, right? How you should go about your trading on a daily basis. It's going to be a 5-step plan. So I'm going to advise you. The video is not going to be too long, right? Try and watch the video till the very end, right? And make sure you have your notes, right? Make sure you have your notes so you can always take notes on anything I'm teaching, on anything I'm saying, right? Now, I'm not gonna waste time. Let's jump up to my screen, right? Let me start sharing my screen, then start showing you what I'm gonna teach you, right? What's gonna help you become profitable. All I do here is try to make you guys profitable, right? You guys already know, right? Those in my Telegram, those in my Discord, you already know I kill the market, right? Most times my personal trade, I do take trade almost all the time. Day trading is my job, right? I do kill the market most of the time. So I just try to help you guys so you guys can also be sniper and make the most out of the market. So I'm not gonna waste time. Let's jump to my screen. Let me begin teaching. First thing on my list now is the trend, right? Trend, some are gonna call it bias, right? Some are gonna call it bias. Now, what does this mean, right? It's literally what you are expecting from the market, right? Usually just what you are expecting the market to do, right? Now, before you jump on the chart, and start buying or selling, you want to first know what direction is market heading. If I'm buying, am I correct? Am I trading along with those institutional traders? Then if I'm selling, am I correct? Am I trading along with these institutional traders? And you already know the last thing you want to be doing, is trading against these institutional traders. If institutional traders are buying, you want to do everything possible to buy as well, right? Then if institutional traders are selling, you want to do everything possible to sell as well. So now that's the first thing to do as a trader. You want to find a bias, you want to know the trend of the market and know what you are expecting. Now, let me take this week, right? Let me just teach you everything I do this week, right? Everything I did this very week. Now, right, the first thing right here now was I want to know the bias, know what I'm expecting for the week, right? Now, this was from a Monday. I'm going to show you how I took all of this trade. This was from a Monday, right? You can easily see it. Monday, February 17th, right? Now, what I first did was I tried to know where the market is heading and what's going to likely happen for the week. Now, gold has been bullish, right? To know this, let me just break it down in a way beginners are even going to do it. To know this, I do use my 4-hour time frame, right? 4-hour time frame for buyers to know what I'm expecting. Now, on a 4-hour time frame, I'm going to see that gold has been clearly in an uptrend, right, in a bullish trend, right? So I expect gold to keep being bullish. Now, since gold has been bullish, has been in an uptrend, right? Since gold has been, let me remove all of this drawing. Now, since gold has been in an uptrend, what am I now expecting on gold? Right, since gold has been in an uptrend, you don't expect me to go over and start selling gold. Gold has been in an uptrend, I will be buying, right? So now, the price was at this point, right? My bar replay subscription has expired, so I have not renewed the bar replay. So I would have just used the bar replay. So gold was at this point during the weekend. So what I now expected is, since gold is bullish, this is a high, I expect the price to break out that high as a break of structure to the upside. Generally now, by on Monday, I already now know what I'm expecting. So I already marked other high as a break of structure. The price has not yet gotten there. So, but I just marked it out as a break of structure because I'm expecting the price to break past that high as a break of structure. See, this is how I traded this full week. Right? I'm going to show you how you should do it every single day. Now that's a break of structure. The price has not broken it when I marked it out. Then the price was at this very point, right? The market has not opened on Monday, so I expected the price once market opens to push up, to break this high. So what did I now do? I want to go to my entry time frame. So that's the second thing right there. Now I now know what I'm expecting. Why am I expecting that? Why am I expecting to go to break structure? First thing, gold has been bullish. Then gold just got to this other block right here. Right then, I'm expecting it to buy. I'm no longer expecting it to go down while gold has been bullish. Then I want to go to my entry. So that's the second thing right here. Entry confirmation. So you take note on each of them, right? Confirmation. Right, entry confirmation. Now what do I want to do? I want to go for my entry confirmation or my entry time frame. So I do use mostly prefer 30 minutes, 15 minutes, 1 hour. These are my 3 time frame. I don't use nothing less than that. 30 minutes, 15 minutes, then 1 hour. Right now, this was the first trade I took right here. Now I funded about, let me make it practical, what I just did this week. I funded about $20 and I showed this straight up to my student. I showed my student the account, right? $20. Now I funded $20 in the trading account. My plan is to give this account 4 trial, right? 4 trial with this very account. So my plan was to take 4 trades on this very account before I blow it. So I'll be risking about $5 for each trade. We're gonna get to risk per trade. Remember, I'm trying to make you guys profitable here, right? So I'm trying to make you guys profitable here. So the first thing right here now is I'm gonna check my risks per trade, right? So before I go over teach about risks per trade, let me go over show you how I entered this very trade, which is the entry confirmation, which is the second step. Now I do take trade from other block or from a breaker block, and I believe you guys now know that, right? Now there is an order block right here. This was the last red candle before the price started buying, right? And this other block, I mark it out on a 15 minutes time frame, right? There is an order block there, the last red candle before the price started pushing up, right? So on a 15 minutes time frame now, you're gonna see it exactly right here. This was the other block right here. Now I'm expecting gold to go up to break this high as a break of structure. So I took my first buy from this very other block, using these lows as my draw on liquidity. I believe you guys now know what draw on liquidity is, or my inducement, right? So I took my buy, the first buy from this very point. Now why am I taking this very buy? Why did I take a sell? Right? Because I know what I'm expecting. I'm expecting the price to go up to break that high as a break of structure, right? Since it's bullish, so I don't look out for sale again. I'm not expecting to break structure to the downside, right? Some of you are gonna say, hey, I don't believe you took these trades, right? I don't believe you took this very trade. Let me show you the setup, right? Like I always tell you guys, I don't just come here and teach you guys. This was the setup right here, right, from a 15 minutes time frame. And if you take a look at this chart now, this was this, let me show you. I took it from the phone, right? I took the screenshot from the phone. If you notice this very candle right here, this was where I marked out for my entry. This was this very candle right here. And if you see the image right here, that was the opening candle, right? It was the opening candle right here. And this was I guess this was a play out, right? This was the opening candle. That was where I took my buy from. The entry was 2893. And take a look at my entry. 2893. The same exact entry. So that was how I took this very first buy right here. From this very point, stop loss just slightly below it. Then I target 1:3. If you notice, I didn't target much, right? I target this high, right? I target this very next high at 2920. So that was my target, 2920, which was this extreme high right here. Beautiful. It's even more than 1:3. So this gave me 1:5 risk to reward ratio. So this was how I took this very first trade right there, using this low now as my draw on liquidity. And remember, for the price to buy from this very other block, it need to hit stop loss. It need liquidity. If you don't understand this, go watch my previous videos on YouTube, where you're gonna understand this liquidity and inducement. Then if you want to join my mentorship class, there's a link in the description where I teach all of this, right? Now, This is how I took this very first trade on Tuesday. On Monday, I didn't take any trade, right? This was the first trade I took on gold on Tuesday, and it was a win. Now, as the trade was moving, I took my second trade from this very second region. I guess it was a sell, right? I guess it was a sell. I took a sell from this very region right here. That was the second trade I was now taking on gold. Now, this sell I took right here, let me show you the setup and the playouts for those who are gonna still doubt. Right, this sale I took, this second trade I took was on a lower time frame, was on a 1 minute time frame, right? I guess it was on the 17th. Yeah, take a look at it. Right, it was on the lower time frame, about 3 minutes time frame. This was the first trade I took right here. This was that buy, the buy I showed you guys earlier. Right, that was the buy I showed you guys earlier. Right, then this second sell I took now was in the 3 minutes time frame. So what happened? I now know that okay, the price has finally, after hitting my take profit on this very trade, then giving me over 274 pips, right? Then it just broke this high as a break of structure, right? If you notice, I didn't take any other buy again, right? So I took this next sell. Why did I take that very sell? Immediately the price breaks this structure as a BOS, I now understand everything regarding the market, right? I expected the price, you already know, once the price is not breaking structure, it's gonna retrace a little before tapping on an order block, then push up again, right? So for this little retracement, I have to jump on the sell, jump on the little retracement. After breaking structure, it cannot just keep going up, it's gonna retrace a little, right? Same thing here. After breaking this structure, it's gonna retrace a little to tap on another block, then break structure again, then retrace a little, right? So that was how I took this very second sell. And what did I do? I went to a lower time frame. Immediately the price broke structure, I now expected a retracement. So I went to a 3 minutes time frame. So take a look at the trade right here. On the 3 minutes time frame, now what did I say I was expecting? A retracement. Now on this 3 minutes time frame, this was the first time the price came. The price had this high right here. I was gonna take a trade from this take the sell from here, but I never did because I now understood everything about the market. I know the price need to first push up, take out the high first, take out all of those traders who will be selling from this very point. So I already know that, so I didn't take my sell from there. So what happened? I marked out this 3 minutes time frame order block right here. Now this order block now has swept this previous high, cleared the liquidity resting above that very previous high, drawn liquidity, so it's a very high probability point of interest. So now I took my sell from this very order block using this very high as my drawn liquidity. So it's from a lower time frame. My stop loss was super tight. If you notice the image on Telegram, right, this was the sell I took. The stop loss was super tight. I was targeting this next low as my full take profit, which was this area right here. I was targeting this area as my full take profit, right? So that was where I expected the price to come to. And take a look at what happened. The price beautifully tapped on my trade, tapped me in, right, and started dumping, and finally hitting full take profit, gave me 1-7. Now that's my entry. I don't just go over, start jumping on trade without knowing what I'm doing. I know once the price breaks structure, it's gonna give me a change of character or some market structure shift, and then start selling to tap on an order block again. Generally, I'm taking this sell, it's just a counter trade. This is not a real direction of the market. So this is just a counter trade. So what happened? I won the second trade, and here was a setup. I had a screenshot of the setup right here. This was the playout. Right now, this was the second trade I took. Now this is my entry. I do enter from order block or from a breaker block. The third trade I took right here was a loss, right? I lost that very trade. I guess I was taking the trade from this very, I guess it was a 15 minutes time frame order block. Right, there was a 15 minutes time frame order block at this very region. Right, I'm going to show you everything I did, right, what I did wrong. Then I'm going to show you the next step. So this step now is for entry. So this was my order block. I was taking the trade from this very order block, right, from this very order block. Then I was taking a buy. I lost this very trade. My stop loss was resting below this very order block right here. Right, I was targeting this next high as my TP. So what happened? Using all of these lows as my draws on liquidity, and you already know draw on liquidity is extremely important. So what happened? The price just came, took me out, right? I did not know why it took me out though, right? It just took me out. Then what happened? Price dump. I guess I was even asking if there was news. I remember sending out the signal, right? Take a look at this. The first buy I took right here, 4TP. Then the sell I took right there, 4TP. Then this was the buy that hit stop loss, right? I was asking if there was news because the buy was so crazy or the sell was so crazy. Just came down and then hit my stop loss, right? That was super fast. Take a look at the sell, the buy, just hit my stop loss, and that was it. So 3 trades now, I lost just 1, right? I took more trade this week, right? I took over up to 5 trades this week, and I won over 4 of the trades, right? 1 hits stop loss, then 1 break even, then 3 full take profit. At least each of those trades I took now was at least 1:4. I'm going to show you the different trades. Now, the second step to this, right, the second step to this is my entry, and you are not seeing it. I do enter from order block, knowing fully well that what I'm expecting, right? So I will not take my trade from an order block. Then to take my trade from an order block, I need liquidity. I don't just jump on trade from some random point because the price is not breaking structure, I'll start selling, or because I'm expecting the price to go up to break structure, I'll start buying. I want to buy or sell from order blocks. So that's my entry, and to enter from there, I need my order block to give me all my confirmations, and I believe you guys know that: break of structure and draw on liquidity. Then the third thing right there is your risk plan, right, or your risk per trade. Now, for every single account, for every single deposit you made, if you don't have a plan for that very account, you're going to end up blowing that very account if you don't have a plan for that account. Now let me show you what I did right here, all this trade I took right here, and then show you what I potentially made this very week. Like I said, I made over $100 right this very week from this $20 trading account, right? This was just a little trading. This is not my main trading account, right? I did it live with my student. Now, this was the first trade I took right here, giving me 1:5 risk to reward ratio. And what is my risk plan? I have $420, and my plan was to risk nothing more than $5 per trade. My plan is to make the account a 4 trial account, meaning I need to lose 4 trades to blow the account, right? I remember giving all my plan. I gave my students my plan, telling them I'm gonna go for at least 1:5. Right? I'm gonna go for at least 1:5. I'm gonna always look for a high probability setup. I'm gonna trade just gold and BTC, right? So now I give that account a 4 trial plan, risking $5 per trade. So let's say this very first trade now I risked $5, right? If I risked $5 now, I had 1:5 risk to reward ratio, meaning for every single $5 I risk, I will make times 5 of that very account, times 5 of that very amount, right? So $5 now times 5, right? 5 times 5 now, that's already giving me about 25. So on this very trade now, I would make about $25 profit. If you notice, I've already doubled my account, even without risking the whole account, even without over leveraging the account, even without gambling the account. But I've just doubled my account. So my account now was now at about 25 plus 20, that's about $45, right, on the very first trade. Then the second trade I took right here was a sell, and I showed you guys this was also a personal sell. I didn't send out this first signal, I didn't send out the second signal. I guess I sent out a signal right here. I guess I sent out a signal, a buy, right? But this third one I sent out was a stop loss, right? So this second trade signal now gave me 1:7 risk to reward ratio. So now I risked the normal $5. I didn't change my risk because I made some profit. I risked my normal $5 on that very trade, and I made 5 times 7, right? That's gonna be about $35. So on that very trade now, I made about $35 from that very trade, right? I don't know if I can show my Exness live account and all the trade I took, right? Now my account now was now resting at over 80 bucks, right, with just 2 trades. Now what helped me with this was my risk plan. If I had risked the whole account and I just hit stop loss on this very first trade, my account is gone. But I had a plan for that very account, and with just 2 TP now, my account has already tripled even without risking the whole account. Then the fourth thing you want to always make sure you always put in place is your risk to reward ratio. And this was what made me money this week. So my plan for this week now was, for each trade that is going to give me at least, I will go for each trade that is going to give me at least 1:5 risk to reward ratio. At least that's the minimum I'm going to go for, right? If it's lower than that, I won't take that very trade. And I was trading BTC and gold, right? Now 1:5, now you already now know, for every single amount I'm risking, I'll make times 5. And for me to lose the profit I just made, I'm going to need 5 stop loss, right? Since I just won about 2 trades now, for me to lose this very account again, I'm going to need 10 stop loss, because I'm going for at least 1:5. And you can easily now see the power of risk to reward ratio. This very third trade now, I lost it, losing just $5 from my $80 now. I still have about $70 in the trading account. Unless I later become greedy, I later start risking more, let's say $15, $20 on a single trade, that's when I will blow this account. But if I'm consistent with my risk, targeting a nice risk to reward ratio, there's a chance that I won't blow this account. Right, then the fifth thing right there is my exits. Right, is your exit. Now this is how I do go about it, right? Last 2 weeks, this was what made me lose money, but I still made profit, but this was what made me lose money last week, right? I always jump out on trades, right? I don't enter trades, or I don't exit trade the way I entered. Right now, if I go over enter a trade, after doing my analysis, I enter the trade, I enter a buy. Before the trade hits my stop loss, you will see me closing out on that very trade. Before the trade hits my stop loss, you see me closing out. Right? Why? Because my psychology was always disturbing me. And eventually that trade will not hit my stop loss, like the trade I took on BTC recently. I closed out, the trade did not hit my stop loss, it ran and hit full take profit, and I was expecting 1:5 risk to reward ratio. Right? I guess the buy was this very buy. So I was expecting 1:5 risk to reward ratio. Can you see it right here? I had it set up on my phone. Right? This was the sale I took. It ran 1:2. Then I break even. Then it took me out as break even. Right? Simply, I did not go over exit the trade because it is my stop loss, right? I left the trade because I feel it will not go in profit again, and that's what made me lost that very account or that very amount, right? So now what you want to do is to make sure you exit the trade only when it hits your stop loss, and depending on how you entered. If you gambled before, let's say just take a look at your chart and you start jumping on buy or you start jumping on sell, that's gambling. Then if it does not go well, you can jump out. But if you actually sat down to analyze, wait for you to hit your stop loss first. That's what did me hell. Wait for you to either hit your stop loss before you go out of the trade. And also, most times is when you are not confident enough. Most times, I personally still wait for it to hit my take profit. If I'm confident with myself, I still wait for it to hit my take profit. And there was a trade I did that very thing. Right, let me see if I'm gonna find it. The trade I did that very exact thing I just said. Right, I waited for it to hit my full take profit. Right, I guess it was this very trade. I believe you can see this trade. Now this trade ran in profit, running over 1:3. Then it came down almost close to my entry. Can you see it? I did not close out on this very trade. I kept on holding. I already break even. My break even was just where I entered. So it came retrace. If it's other traders, you see them start jumping out. Why? Because they are now afraid. Right then, it finally ran up and hitting my full take profit. Right? But if I was not strong with my psychology. You start seeing me jumping out when it was reversing. So that's why your exit is always important. Number 2 was entry. The last one now was exit. So if you enter a trade with your technical analysis, wait for either hit your stop loss, right? Or sometimes you break even or take profit. Right? I don't say don't close trade in profit once you are making profit. If it gets to 1:3, you can take your profit. But if you are strong enough with your psychology, you are good enough with your psychology, you can always hold till it hits full take profit. So these are my 4-step plan, right? That made me make some really good profit from the market this week, right? So this was my 5-step plan that made me make profit from the market this week. Now, all of this trade I took on BTC, on gold today, this week. I took some trade on gold today, but I lost about 2 trades today. Right, all of this trade I took on gold, BTC, on the market this week, right, we're all based on what I expected. We're all based on the bias I did in the beginning of the week. I expected the price to break that structure, and I kept on buying, kept on looking out for buys. Then I expected the price to go down, give me a change of character once it's done breaking structure, then go down. That was how I took my sell. Right? So now you want to first go over, follow that first step plan I gave you. Right? Know your bias of the market, which is one of the most important things. If you don't know what to expect, I believe that was the last class I did with my students, right, on top the analysis. If you don't know what to expect, right, if you don't know what to expect and what the market is going to likely do, you're going to keep losing trades over and over again. So these are all the trades I took this week. First trade was a win, second win, third win, right? This one came so close to our stop loss, but I guess we didn't get stopped. I sent out the signal. I sent out the signal straight out to my students. I remember this. One is to Forex to run the show. Then this one was a personal trade, right? This sale was also a personal trade. This was the third trade I sent out. So it hit our stop loss, right? Then this was, so I didn't take this very trade, but I just placed this there. I didn't take it on my account. So let me remove it. Now, then this was I believe the last trade I took this very week, right? I lost this very trade. Right, so now this trade now was a break even. It ran about 1:1.2, 1:2 reached the rod ratio. It ran up to 1:2, right, before finally coming down. And at 1:2, I do break even. Take a look at the signal. This was a signal right here. Buy gold. It was a limit order. And take a look at the playout. It ran in 1:2 over 100 pips, by over 120 pips. Right, I can remember about 1:2 reached the rod ratio. Then I said break even, then it just came back and then hit my break even. Right? Simple. Then this was the GBP JPY trade we took today. This trade is currently still running in profit. Right? It's already giving us about 1:1, 1:2 reached the reward ratio. Right? Then I took another buy on gold today. Right? This very buy right here. So this buy hit our stop loss today. Right? I guess I deleted it. Let me see. It was on a lower time frame, so I didn't delete it. It was on a lower time frame because that's why it's not showing. I took it from a 3-5 minutes time frame from this very point, and we got stopped out. Right? Simple. So this is how I traded this very week. I made roughly over $100 from a $20 trading account. I didn't flip the account. I didn't gamble the account. I was just conservative with my risk, right? Disciplined with my trading plan. Right, and it went well. Right, so now that's just all. Right, that's all, and that's how I traded this very week. So throughout this week now, I ended taking about 1, 2, 3, 4, 5, 6, 7, 8 trades. Right, about 3 hit stop loss and 5 full take profits, giving me at least 1:4. Right, at least all of these trades gave me at least 1:4. Though I didn't take all of the trades, right? I didn't take all of the trade on the little account, on the $20 trading account. right? I took some of them on my main trading account, right? Now I ended this week making crazy profits from the market, right? It's as simple as that. Follow these 5 steps I just taught you, right? And with time, follow them. Just stick to, and I almost forgot to add this. Stick to just few currency pair. If you notice, I only did this on gold. Try this with gold, gave me 8 opportunity. I only did it on gold. So you just go over, pick a currency, just stick to the few currency. Don't go over, add up 120 currency and start trading them. Pick few, stick to them, and you're always gonna find opportunities, right? So it's as simple as that. So if this video was helpful, don't forget, like the video, right? Subscribe and turn on the notification bell, right? And also, if you wish to learn from me, I teach all of this, not just this what I'm just teaching on YouTube. I do it in depth, right? I teach you from A to Z. How I become profitable, how I keep winning trades, right? How I keep sniping and entering trades with a sniper entry, right? So if you want to learn all of this, then join my mentorship class. There's a link in the description. It's gonna be the first link. Just click on it and you'll be redirected, right? It's a very little fee. I don't charge much, right? So that's all. Rewatch the video and take note on everything I've taught you, and I'll see you all in the very next video. So take care.